My name is Michael Guyot, publisher of the Lead Lag Report. Joining me for the hour, the man himself, Todd Harrison. So, Todd, a lot of people are familiar with you, but some may not be. So maybe set the stage a little bit as far as who you are, what you've done, and what you're doing currently.
Thank you, Michael. About 30 some odd years on Wall Street, started at Morgan Stanley, went over to the buy side, Galleon, Kramer Berkowitz among them. Moved over to a place called Minyans for some time, which was writing about the markets. That's where you and I crossed paths back in the day. And certainly been attuned to the markets, attuned to the opportunities, and attuned in particular for the last 15 years on the cannabis space, which has been a bit of a bumpy ride for sure, but a fascinating one nonetheless. So I'll pause there.
Okay, so I want to focus on the word opportunity for a moment, because opportunity doesn't necessarily have a time frame, but people seem to think that opportunities have to pay out right away. And as you alluded to, the cannabis space, despite all of the arguments for it, has been a hard place to invest. And unfortunately, most people, when they invest, it's only for a couple of months. Talk about maybe the last decade or so, as far as why it's, you think, been such a struggle to get some sustained momentum, and maybe some of the history around the legislation that failed in the past, but maybe changing going forward.
I mean, listen, the history of cannabis is an involved one. It goes back 10,000 years through the lens of medicine and wellness throughout history. Hemp actually traces back somewhat upwards of 30,000 years. So this has been around a while. And it was demonized and brought over to the illicit realm through U.S. government action some 70 years ago. You weren't allowed to test it unless it was for testing for negatives. And this war on drugs continued, and all of those unintended consequences and moral hazards that tend to happen when you do something like that. Of course, that happened. My journey, just to put it out there, I was president of Kramer Berkowitz in 2001 when the planes hit, saw people holding hands and jumping, ran from the smoke, and that indirectly led me to where I am now. I started to talk with a woman by the name of Dr. Julie Holland, who assuaged my guilt, which there was much, and really led me down the path of exploring the science and the history and all that jazz. And been focusing on it full time, I guess now, a little over 5 years. We have the CB1 Wellness Fund. We also have an advisory shop where we work with companies in the industry, some public, some private, the MSOS ETF, which is the plant-touching U.S. cannabis ETF. And here we are. And I think as you look back over the last year or so, there are a lot of false starts and empty promises with cannabis in particular. But I also think there's a few dynamics in play here. In cannabis in particular, obviously, the space got over its skis with excitement when New Jersey flipped the switch in November of 2020 and the specter of federal movement took root. And you saw that, March 20 top put in. And subsequently, I think we're down about 75% from there. Paradoxically, as a lot of the things that we got excited about have come to fruition. The New Jersey did, in fact, trigger the tri-state to flip. New York, Connecticut, New Jersey. I think that's pretty massive, although certainly the market has its own agenda here, and we'll get to that. But that's sort of our thesis as we look at cannabis, and we say it's a state-led story. It's going to be bumpy. It's not going to be linear, but over time, you're going to see as the tri-state unlocks the East Coast, you'll see Ohio, you'll see Pennsylvania, you'll see Florida flip, and this will all come online. Certainly with lower prices comes narratives of why, and of course, and all that, just as much as there were narratives on the upside in November of 2020 as to why, and of course, in all of the reasons why the space was poised. But this is a very unique space in that institutions are largely gated. About 95% of the cap tables are the retail audience. And certainly, as we've identified in the last few months, really was something we've been watching for the last 14, 15 months, but really we're starting to understand what the algorithmic sort of machination is doing and why, for that matter, the XBI, biotech, and ARC and MSOS have a very similar chart for the last 15 months, and that has to do with the vol factor trade overlaying a number of other things. But there's a lot. This is a multilinear equation, so I'm not going to try to cover everything in one conversation, but certainly there's a lot going on, right? When you have a retail-dominated segment that is really being targeted, whether it's the other side of Melvin or the other side of Archegos. There's been a concerted effort to really drill down on the custody of cannabis, U.S. cannabis stocks, and also, I think, to really put a target on the back of the retail investor. Again, a separate conversation. We're looking right now, at all-time low valuations. Certainly, there are litany of concerns, but we do think that the states will continue to lead this story. We don't foresee anything comprehensive at the federal level. We do think we'll get safe banking by the end of the year, which is a minority view at this point. But it's not credit. That's not why we're bullish on the space. We're bullish on the space because iron sharpens iron. The operators who can get through this are going to win. And that's who we want to stay with and keep our money with. So I'll take a breath, and Michael, and let you sort of dictate where we go.
Yeah, no, so it's interesting because you mentioned the all-time low valuation that is shared at the top of the space. More than 2 in 3 Americans support legalizing marijuana. So if you look at the polls, that's going to all-time highs as far as legalization support, but valuations are hitting all-time lows. And I'm going to make the assumption that you only get that convergence if you get safe banking in place or some kind of other federal dynamic. For those who are unfamiliar, Todd, with safe banking and some of those nuances around federal versus state, just educate the audience kind of ground up, how important is it for the federal government to handle or kind of answer these questions around how transactions should take place when it comes to banks and these cannabis companies locally?
Yeah, I mean, listen, if you put your hands over the screens, we like to joke that the last 5 years has been just an unbelievable time for U.S. cannabis and how the thesis has evolved, how the states have led the push. The 10th, I always say the 10th commandment, the 10th Amendment, states as laboratories of democracy. This is that's the cannabis story right now, and which happens, oh, by the way, to play real well with today's judiciary, which we can come back to. But nonetheless, the states continue to lead. They're driving tax revenue. They're driving jobs. I think there's upwards of 450,000 jobs right now, full-time in U.S. cannabis. That's not being factored into the Bureau of Labor Statistics, but probably will on the next election year. But nonetheless, the states are driving the story. But because it's federally illegal, the exchanges won't list it, and more banks won't custody the assets, which is the real issue. Even the banks that had allowed for custody have grandfathered that and don't allow new accounts into custody. So it's really sort of they're choking off the buy side, while there is, upwards of, call it 80% of the volume on any given day for plant-touching cannabis is algorithmic. And that's been in play for some time now, right? It's been a retail-dominated universe, and the retail investors gotten shellacked over the last 15 months, along with a lot of professionals, by the way. But that's all you have in terms of cap tables and audience, it becomes problematic. So now you have a number of reasons why there's plenty of reasons for negativity down at these levels. We can talk about the bull case. We can talk about the bear case. We can talk about the structural case. Whatever you want to do.
Well, let's talk about that retail versus institutional side, because retail kind of more on the public equity side. Institution will be more on the, I assume, private side. And you mentioned cap tables are more on the retail side, but you got to assume. I mean, why is it that institutions have not been maybe putting more money into the space? I mean, obviously everybody wants to have the safe side answered, right?
But I'll tell you exactly why. Because if you've got a $10 or $15 billion franchise, you're not going to risk it for a $100 million sleeve. I mean, that's part of the reason. That's the same reason that this big CPG companies won't come in, because they don't want to be painted with that 280E tax brush, right? So this has been very, very coordinated to be arm's length because of the amount of money that's at stake, and sort of how it plays out at the federal level is going to dictate a lot of what happens and how it happens, right? Like, we think we know where this is going up and to the right. We don't know how or when yet, but listen, Connecticut's going to flip the switch this year. It took Connecticut 5 years to, settle on recreational or adult use cannabis. It's going to take 50 Connecticut's more than a year and a half, right? It just is. There's a lot of moving parts. There's a lot of seats at the table. You have, pretty much every facet of society stakes a legitimate claim to having a part of this industry, because it is such a ubiquitous, we believe will be such a ubiquitous industry going forward.
So I think there's, and maybe this is a wrong impression, But I think there's this impression that for you to get real federal clarity, it's got to come from the Democrats. Maybe I'm wrong on that, although I've seen some analysis that would suggest Republicans are kind of leaning more towards in favor of legalization to some extent or some form of it. Talk about how the politics of this have evolved over time, and what do you think it's going to take? Because I'm pretty sure, correct me if I'm wrong, that Biden, that was one of his campaign promises, that this would be part of his agenda to address, and you haven't really had much action there.
Yeah, no, listen, I think if the Democrats had the votes, they would want to put into place their framework for cannabis, which would be much more skewed towards that social justice and criminal justice element. But they don't have the votes. And if the Republicans have the votes, they're going to want to skew it much more toward the business interests, whether it's that, the alcohol distributorship model, right? Or something to that effect that's going to be a little bit more skewed toward big business, right? Safe banking is the low hanging fruit right now. Safe banking would allow for commercial banking. It would require FinCEN and AML guidance to be updated, which we believe will lead to uplisting. Certainly will help with the custody situation, but that's what the industry needs and wants right now. And it's, by the way, the only thing that can pass. So you'll hear a lot going forward about Safe Plus. Safe being safe banking, the plus being what kind of social and criminal justice can we get through in this environment? Not what should be done, but what can be done. And it's my understanding, and I'm only going to talk about what has been announced publicly, that you saw Joe Biden already triggered or sort of, moved toward clemencies for cannabis, nonviolent cannabis related offenses. And we're told that there's going to be more of that after the midterms. So that's at the federal level. At the state level, because, that's where most of people are locked up right now. The expungements, there's a real nifty bill called the HOPE Act that will reward states that expunge nonviolent cannabis offenders, but not require them to. That's been sponsored by Dave Joyce, who's a Republican in the House, with AOC, who's a Democrat in the House. We would love to see that hop the aisle and be sponsored by in a bipartisan way over in the Senate. So you have a bipartisan, bicameral piece of legislation that makes sense. That would be, the perfect other side of the plus to affix to safe banking. So now you have federal reform, state level reform, and functional banking, which, by the way, the social justice applicants need a lot more than the bigger companies right now. So that's how we see it playing out. But politics are pretty foobar. We don't see Schumer and Booker going back to New York and New Jersey without functional banking for their social justice programs.
Okay, now you mentioned survival earlier. That what's exciting maybe is that those that survive will probably be the ones that really thrive the most. Talk about how often companies get started outside of public markets. How often do companies get involved in, or entrepreneurs get involved with cannabis and then close down? What's sort of the survival rate that you've seen, and when it comes to the universe, how large is it when it comes to public equities?
Well, the whole public equity universe right now is under 25 billion, which is pretty mind-boggling, if you ask me. We had a Zoom call 2 weeks ago. I think there's about 60, 65 billion on the call. That's every publicly traded U.S. cannabis company. It's pretty crazy, right? But that's the market. In terms of what's going on behind the scenes right now, there's a lot of pain. There's a lot of, like I said before, it's a multi-linear dynamic. There's a lot of moving parts. One of those moving parts was a very robust Croptober effect last year. California we had a bumper crop and really flooded the rest of the states and created that seasonality within the earnings cycle. And certainly that's a thing. But we're hearing now that upward of 50% of the leases in California are not going to be re-upped. There's a lot of other, regulatory, headwinds coming their way, not so much for the weed, but for the water in California facing a drought. They're going to really crack down on illegal grows because they use so much water, things like that. So the market over time, we believe, is going to find its natural equilibrium. You have a universe out there that says, just look at Canada, just look at California. Okay, look at California. Look at Colorado. I think it was out this morning at, it was like year over year up 5% in some of these mature markets. It's obviously not a linear 5%. There's A lot of states that are down. They're you have a quilt, a puzzle, if you will, with 50 different pieces, 37 of which fit. Some of them are taller than others, but you're building this industry from the inside out. And by the way, despite federal regulation, the pioneers and the entrepreneurs who built U.S. cannabis have subsequently been villainized as big business trying to squeeze people out. Like, where else in the world do you have the opportunity to build an industry from scratch, despite the fact you have to go on the shitboards in Canada to list or the pink sheets to list, and go out and be able to generate free cash flow despite all the fuckery, despite the fact that nobody can buy your stock, and despite the fact you can't even put your money in a bank or take credit cards, right? Like, even this playing field, and you're going to see some of these operators who, by the way, again, get a real bad rap. Some of them are deserved, granted, right? But some of them are, these are your future leaders, right? I mean, we talked about this the last time I was on, Michael. We talked about that 2012 tweet where I said, the Great Depression ended the first prohibition, and the next Great Depression won the modern prohibition of cannabis. That was November of 2012, I think. And here we are 10 years later. Like, do I think we're going to a depression? I don't know. For 25% of the country, probably, if they're not already there. It's going to, there's two sides to every cycle, right? If you believe excess breeds excess, there's another side to the meme stock mania, presumably. But I digress. I think cannabis, if you talk about the leaders coming out of a crisis not being the same as the leaders that enter a crisis, show me another industry that has a mostly domestic supply chain that's generating jobs, that's generating tax revenue. And whatever happens with interstate or as the FDA gets folded in over time, all of that stuff will figure itself out, because what they don't want to do is stop the gravy train, right? There's a lot of states that are going to, as a federal stimulus starts to wane, are going to be reliant on cannabis-driven tax revenues, and which is also why I think they're going to continue to crack down on the gray market.
It's interesting you mentioned the mostly domestic supply chain part of it, because I haven't really heard or thought about sort of how these supply chain disruptions might be impacting the space. You alluded to the drought in California, but is there really any kind of supply chain equivalent crisis, or is any of that impacting cannabis now or expected to in the coming years?
I mean, listen, you have fertilizer, although we're told, that it's manageable by some of the biggest operators out there. And vape cartridges, lighting, certain elements, packaging. You have international exposure. But my point being, most of that supply chain, at least for flower, which is still, I think, a big part of the conversation, although ultimately for 2.0, just to kind of take a step back, 1.0 was Canadian cannabis. That was funded capacity and let's grow weed. 2.0 is US-led CPG, the notion of cannabis as an ingredient, or cannabinoids, I should say, as an ingredient across a number of use cases and products. And then 3.0 on the horizon, or maybe even not so much on the horizon anymore, is that notion of the biotech pathway and efficacious agility across a number of different indications. And that's where we think it's going.
One of the things I've heard from people that are bullish on the longer term prospects is that this idea that they already own tobacco companies, and it's inevitable that tobacco companies will get involved, so they're going to participate in the trend at some point. So why bother with kind of the pure play of the here and now? What will be your response to that notion that tobacco companies ultimately are going to get in the space and you don't necessarily have to kind of play them right now?
Well, it's a good question. I think there's two things. One, I think it's going to be a bit of a buy build. Once CPG is allowed to enter, there's going to be a process of buy build, right? You're going to see companies come off the board because it's not an easy supply chain at scale to grow good, high quality cannabis. But as you start to bridge out into the second part of the answer, which is your brand affinity and the ability of these MSOs in between here and there, here being now and there being when these other CPG companies come in, is going to be the ability to execute against your moat, build customer affinity, build brand awareness in the marketplace, and cleverly take that brand affinity across state lines in a world where you cannot take cannabis across state lines. And that's sort of the task at hand for a lot of these cannabis companies as they look to market as a national brand.
So what's interesting to me here is that when I look at some of these cannabis stocks, they all peaked, kind of around the same time in February of last year, which is when I've often argued is where the real bear market across the board started. And, it's been a severe drawdown there. But to your point, it's not just been there. It's been obviously innovation stocks and small caps and a lot of parts of the marketplace. And the headline averages have not shown the extent of devastation with most stocks underneath the surface. I'm just curious, Todd, I mean, maybe even beyond cannabis, have you thought about what may have happened in February of last year that explains why things started really deteriorating beneath the surface? I mean, I've seen things around liquidity and other explanations, but something happened in that time period that really caused an about face in a lot of positions.
Yeah, like I said before, I think that somewhere at some point a flip switched or switch flipped, I should say. Pardon me. And they turned the gun back around at retail, and whether that was articulated through vol factor strategies, and I've spoken to vol funds. If I look at the front page of MSOS, half of them are vol funds. 80% on most days, 75 to 80% of the volume on Plant Touch Your Name is algorithms. So, like, we have a sense that there has been a vol factor strategy that's been on as a hedge against the other factor strategies in size. I don't know if that's Citadel or Susquehanna or Jane Street or whoever it is. It really doesn't matter who it is, but it helps to explain, that CIBC algo that we've, we've almost, got, adopted. We see it every day. So that's been going on. But I think you're also seeing ARBs of the underlying stocks, at least for the MSOS, against the ETF. That's the other side of a lot of that algorithmic trading. And with the retail holders, I think with all three of those sectors you started to talk about, those were the three highest volatility ETFs over the last year. I'm told, or at least two of the three of the top five, which is the XBI, the MSOS, and ARC. So I think that helps to explain some of it thematically. It was a volatility trade, but certainly not the reason these things have come down. I mean, remember the pantry stuffing, into COVID, had created unsustainable compares. And you see down mid-single digits from there versus down, 30, 40% for some alcohol. So, okay, post-COVID normalization, you had the state-level delays, which, again, you look at Arizona, which made $1.2 billion before New Jersey, ever got off the schneid. Delays like that, and of course, what goes on in D.C. hasn't helped. And that's before you have all the inflation and growth and consumer concerns. So like I said, there's a lot of reasons you could point to and say, why bother? Like, if institutions can't buy them, this is a dead money trade for, as it has been for 15 months. Okay, and I think a lot of people have sort of made that choice. We saw a lot of forced selling. We saw a lot of people tap out, and still, like, the diehards who I talked to were like, what are we missing? When you don't really have a real market, these things trade. Like the other day, one of our names traded like, a couple thousand shares by lunchtime. It's you're sort of laying in wait for, the fundamentals to prove through. But in some of these cases, some of these our positions, we're very excited. We're just waiting for the rest of the market to pick up on it. And we think that happens in the back half of this year.
So I think this is the difference between a pro and an amateur, and when it comes to trading in general, which is that pros get excited in a drawdown, right? Amateurs, you can argue, don't, because they come in, they start losing money right away, and then suddenly whatever their investment quote unquote thesis is doesn't become a thesis, it becomes a trade, right? That's based on the short term. And I want to relate that a little bit to emotion in the space, right? Because you get a lot of vitriol when you're talking about a theme, talking about a strategy. In your case, cannabis. In my case, risk on, risk off. You get a lot of emotional vitriol from investors that say, why would I even bother listening to what you have to say? Look at how this theme or this strategy, this approach has worked, in the most recent past. For my own edification, Todd, because you've had a lot of experience in investing and dealing with clients, how do you try to get people to think properly about investing in terms of not just time frame, but the idea that the best returns come from buy low, sell high, not buy high, sell higher?
Well, I think, listen, there's different strokes for different folks. And I think, if anything, at least when we talk about CB1, it's the, the conversation that you can get the direction, or you can get the timing, but you're very rarely going to nail both. right? In the last 5 years alone, this space has done two, full cycles. And in those down cycles, we've seen, and what I believe to be the best elements of any cycle is what people do when the going gets tough. Who does what? Who cuts corners? Who can still execute? Who communicates? Whatever it is. And in the first downturn, that really, behooved us because we got to really know a number of companies. Ultimately, we started working with a few of them. And that's where you build your alliances, because no matter what happens, there's strength in numbers. As long as those numbers are the right type of people, there are few and far between in an emerging, nascent frontier industry like cannabis. But make no mistake, there are good people in this business and there are good operators in this business. And like I said before, if they can get through this, like wait till you start seeing 280E being addressed as it is at the state level. That's the onerous tax code. Wait till you see these things trading on the New York Stock Exchange. They may still trade with biotech and ARC, but I would venture to guess that they would trade at a higher multiple of where they're trading right now, which is pretty amazing for somebody who's been watching stocks for as long as we have. So it's really about syncing your time horizon and your risk profile and communicating what your thesis is. And like I said before, we're state-led guys. Like, we're focusing on the states. I understand that margins are going to come down over time. We understand that that there's going to be a lot of bumps in the road. And I'm not, anybody who's read me for the better part of 20 years knows that I'm not like taking, a healthy market landscape for granted, right? Like, nothing would surprise me in this market. I've been doing this for 32 years. I've seen a lot of shit go down in this market. And I still get amazed. The negative crude trade was one for the ages. But my point is, like, you find good companies that continue to execute, that you think are completely off the radar, which I think these are, and you hold on for dear life. And if you're right, you change the game for yourself and your family and your investors. And if you're wrong, you wear it shamefully and you get mocked on Twitter. I mean, everybody's got to make their own decisions.
So I think it's interesting, Todd, this point about retail versus algos, because if the argument is that a lot of trading happens because of algorithms and let's call it the quote unquote machine, well, because of these nuances when it comes to the cannabis space, more of that trading you can argue is pure retail as opposed to the algos that are pervasive elsewhere. I wonder if you think, Todd, that means that momentum in the space looks actually very different than momentum outside the space because you don't have the same degree of algorithmic interference with price action.
Well, it's amplified. I mean, listen, this is, again, algos are not the reason these stocks are lower, right? There's been enough being thrown at this space, both in terms of what we can see and what we can't, in terms of plumbing and all that. But they're not the reason that the space is down. To your point, and my point earlier, look at biotech and look at, ARC and a number of other things that since February of last year are materially lower, right? But what they do is they amplify the trend and they create dislocations. I mean, we saw it in November, the MSOS, I think was up like 60% in like 2 weeks just on, I think it was when the Nancy Mace bill came out, it got faded. But risk happens fast in cannabis, right? And you've gotten a lot, 15 months in a row of getting your head handed to you. Who wants to do that? I mean, we live, breathe, and die this space, and it's not fun for us. But like you said, like, we're excited. Like we're more excited now. We're a day closer to the turn. We still think that we're going to see some legislation. But I'll tell you this, Michael, in my heart of heart, gut of guts, and innards of 32 years, like, safe banking just feels like it's too obvious to be the catalyst. Like, I don't know what it will be, but I just don't know if it'll be that.
Yeah, and it's often the thing which is not obvious, which is the real catalyst, right? That's only explained after momentum's already started. Just as a general truism, right? When it comes to the market.
And if the structural short is embedded, as we know, and I don't even think we mentioned that on the CSE, naked shorting is evidently, allowed. So we don't even know, what the short interest is on some of these names. We know it on the MSOS. We know what the percentage of the daily trading volume is algorithmically, but certainly, we saw a lot of funds tap out for selling, got the tap on the shoulder. We saw people get fired. I mean, I don't know. I think we come back, we talk at the end of the year, beginning of next year, and it sort of be the other side of this, right? Or like, why would you sell? I'm like, because, look at the run. Hey, but if wishes were conditions, Michael, I'd weigh 300 pounds. We'll see.
Well, if you weighed 300 pounds, you would be a store of value, given the way beef prices
I
are.
have too much rentals. I have
Right,
too
yeah,
many
exactly.
rentals.
And everybody again that's here, make sure you follow Todd Harrison. I've known him a long time. He's not only a very thoughtful investor, but overall a good human being. I believe you do business with good human beings. So Todd's among my favorites there. All right, so Todd, I want to pivot a little bit to something I remember from back in the Minionville days, which is this theme you had for a while that there's real risk that the societal fabric is tearing, that there's a lot of discontent that's coming. And I remember you doing, I think, a conference or two where you had several notable speakers like a Peter Atwater and others talking about how that is a trend that's coming, and you got to be on the lookout for some of these risks to the overall system. Talk about your thesis back then around some of those things we're seeing now around societal discontent, and how does some of this get resolved, if at all, when there's so much concern about higher prices and a war?
Yeah, I mean, I think this was 2008, and we were talking about the notion that the U.S. government was going to inhale or buy the cancer to sell the car crash, right? They were going to inhale all the toxic fumes in the economy, not allow it to rightfully reset itself with the forest fire. That's scary and dangerous, but ultimately necessary for fertile birthing. And sure enough, that's what we had. And we talked at the time about the tricky trifecta of societal acrimony, social unrest, and geopolitical conflict, and how that, the unavoidable consequences of those actions is leading to war. And listen, we've seen it. Societal acrimony, whether it was Occupy Wall Street or whether it was around the elections or just everything we've seen at the state level, and now obviously how that's manifested, and then the social mood and the tribalism. Yeah, I mean, I don't know the answer. I mean, if I could figure out how to turn it, I would. I don't. I do believe and understand that there's a way to turn it to the positive, just as there's a way to turn it to the negative. And I think if society is the sum of the parts, hopefully we can push it in the right direction for the benefit of our kids. But it's unfortunately, Michael, as you know, it's been it's been one of the more accurate observations.
Part of that is this tribalism that you kind of alluded to, and tribalism I always have a problem with, because if your identity is that of a group, then you don't have much of an identity. You're just a part of the group, right? So, but it's interesting in the context of investing, because you can make a case that for any emerging industry, whether it's blockchain or cannabis, you almost need to have a degree of tribalism and hardcore fans as a group to be the early adopters, to keep that investment going, to keep that story out there, to be the maximalists until there's kind of some kind of widespread adoption. I mean, I see those hashtags all the time, MSO gang, right? I mean, as an example, talk about some of the, maybe from an investment perspective, how you think about some of the pros and cons of tribalism when it comes to belief in an investment theme. Because yes, you can be right on an investment, but wrong in your timing, and you can certainly be wrong in your weighting. So talk about that dynamic a little bit.
Yeah, I mean, listen, one of the things that you and I and always used to talk about was discipline trumps conviction. And that's probably the one thing that I violated more than any other for the last 15 months, just in terms of watching these things break levels and, and using the price to, try to buy more. We've been bullish for 10 years. Doesn't do us any good on the way down, certainly. But we've been consistent in why we've been bullish. We've been wrong in terms of the, looking back over the last, period of time. But I think everybody needs to identify, like I said before, synchronize your time horizon, your risk profile. I think ultimately, if you say, tribalism in investing, they probably don't mix very well. The laser eye things really gave me a pause for cause. But I will tell you that the MSO gang, ironically enough, was really well intentioned in trying to demonstrate the math that's different between U.S. operators and their Canadian counterparts. And, to that end, I think, it was largely successful, but it also became entrapping in certain ways because who wants to get off the train when you still think the best is yet to come? And a lot of people aren't positioned for that or aren't able to ride that wave. It takes, a certain amount of fortitude, and it takes a certain amount of guile, I guess. But we've been long, Michael. It's one thing to say, stay long on this trade, and then sell to your unsuspecting minions. It's another thing to be wrong or early, as the case may be. And I have a feeling if cannabis, flips the switch as we think it's going to, and sort of like the boy who cried safe. But okay, it's going to look a lot different. And the perceptions around who was bullish, who was bearish, who was opportunistic, every different strokes for different folks. You got to do what's right for you. But I do think that drawing attention to the opportunity, I can tell you, top down, it's definitely raised awareness. And bottom up, I can tell you what most people don't see on Twitter is the efforts that are being put in to move the needle on the ground and to move the criminal justice needle and to move the conversation forward. And it's ironic that a lot of people who are loudest on Twitter don't do anything about the things that are going to really make the difference. But I guess that's just the way it's always been.
It's funny you said, you've been bullish for 10 years. It's funny how people forget that you could have been bullish on stocks for 10 years in 2003 and then here comes 2008 and then suddenly that bullishness gets countered, right? I mean, the nature of investing is that you can be bullish and then suddenly look like a fool in, a sample of time, but still ultimately be right with enough time, right? And it sounds to me like, Todd, that's sort of the way you're viewing the cannabis space overall.
I mean, listen, we've been long as rain for the last, what is it now, 13, 14 months? Give me a crystal ball, we would have sold everything and bought it back. That's not the way life works. We think the best is yet to come. We really do think that the leaders that come through this time are going to be the winners that come out of this, whether it's, the second coming of the Great Depression and the second coming of the repeal of prohibition. I don't think there's any question that cannabis as an asset class, cannabis as an investment thesis is going backward, not with 92% now of the U.S. population. 92%, the same amount of percentage of people in the United States that support cannabis legalization, either medical or recreational, as you do who support Ukraine in the conflict with Russia. Right? I mean, it's really quite. Like I said, if you put your hands over the screens, the amount of progress for this country in terms of cannabis led by the states, right? It's just amazing. And I just think you got to sort of let the thesis play through.
All right, so let's go now towards the kind of bigger macro environment because you hit on Great Depression 2.0 and we've talked about societal unrest and everything is in some way, shape, or form interrelated based on whatever's happening in the macro environment. Maybe just riff for a little bit, Todd, on how you're seeing the global landscape here for pretty much all the major asset classes, right? Stocks and bonds have been horrendous. Bonds more so than stocks. Treasuries have not been risk off. How do you see this shaping out here in terms of opportunities? What are the implications for growth and for, again, that societal unrest?
Well, I mean, listen, there's so many variables. Tell me what happens with Putin, right? Tell me what happens, with the rate and pace of the deglobalization, right? Like I said, I really do think that one of the narratives for U.S. cannabis that's been most overlooked is the mostly domestic supply chain. And if we continue down this path, probably regional sort of geographies emerge. All of that sort of, as not to say the fourth turning, but like we're sort of at the point, right, where something new has to happen. And I remember at Minyanville when we dropped weapons of mass destruction on Baghdad and watched it on CNN. I wrote at the time, I feel like this is the fall of the Roman Empire as they were pulling down the Saddam statue. What weapons of mass destruction? So it felt like we were poking the global bear for a long time. You denominate, global assets or and commodities in dollars, and then you manipulate the measuring stick of that you use, and of course the world is pissed off, right? So like I love my country. I think we got some things that we need to do better. And if there was a political system, I'd chop off both red zones and be very happy with that new field. But that's not the world we live in. I think we need better leadership options. But again, I don't know I don't know how that plays out in the election. I don't think it's going to be as bad as everyone thinks. I don't think it's going to be as good as everybody thinks. But I'll tell you this: Trump pushed me to the left, and Biden pushed me right back to the right. So, I'm kind of stuck in the middle with you here. I do know that you need to keep your calm and you need to think about solutions and, you have to have good, intentions. And listen, I feel terrible about, the wealth destruction across the cannabis landscape, but it's not like I'm a color commentator. I'm feeling it, right? I've destroyed a lot of wealth, but I don't think that wealth is gone forever. I think that wealth is going to return. And if we're betting on the right people to lead the right companies out of this, then it's not going to be it's not going to be a conversation of why do you own this. It's going to be a conversation of why didn't you own more, as it always is, right? I just don't know when that conversation shifts. If you're out there every day waving your hand about the industry, you can't have it both ways, right? Like, and by the way, just so it's said, last November, after 2 straight years on Twitter, after probably one too many dances with Kim Crawford, like I got sloppy, right? Like I did. Like I got sloppy. I started calling the bottom. I did a lot of damage to my name because, 30 years online or however long it's been now, 20, what year is it? 22 years online. But you live and you learn, right? Like you get up or you don't. And the reality is you got to keep going, right? Like you just got to keep going. Like if you believe in what you're doing, you got to believe in yourself. You got to believe in what you're doing. You got to believe who you're doing it with. And you can't let people who want to take you down to make themselves feel better, you can't give them the oxygen, right? It took me a long time to realize that. And I just was like, you know what? That's true because nobody's going to please everybody. Now, it's one thing to have a valid conversation, to be a gentleman about how it is, and to offer the other point of view. I mean, at Minionville, that was the whole thing. We brought in a lot of thought leaders. We had, in that residual grist between, our arguments, not only, where the education is, but that's also where the profits are. And, it just evolved on Twitter like there's a lot of assholes, right? So it's just the worth it meter, versus just doing what you're doing and staying true is a lot different than just, like you said before, living in an echo chamber, right? You want to hear the other side, but you just don't want to hear it from people who are screaming in your face and telling you what a fucking asshole you are. Anyway.
But it's also interesting, right? Because people will blame, they'll blame me, they'll blame you based on when they entered, right? That particular thesis that we respectfully believe in. But it's funny.
Listen, there's a lot of smart people, Michael, and there's a lot of people who are scared. There's a lot of people who are hurt, and there's a lot of people who are feeling the toll of everything that's going on in the world, myself included. All right, full disclosure. But I know we have like 10 minutes. I want to just put something on your radar real quick because we talked about. I think we started talking about the positives, right? New York, tri-state, Eastern Seaboard, all that coming on. The valuations, Illinois is opening up a whole new $1 billion opportunity through distribution in stores. We talked about sentiment, talked about all the negatives, I think. The unknowns, right? So DC, safe banking, like that's an unknown. There's a lawsuit out there that Abner Curtin over at Ascend is in the process of pulling together. And the only reason that's interesting is because of who we're being told is the lead counsel, and that's David Boies. And they're getting a fair amount of sponsorship, I'm told, behind this. Boies sees, in Marijuana Moment wrote a great article about this last week. He sees a pathway, I guess because Clarence Thomas had ruled, it was in the minority on an issue. There's a pathway here. I only bring it up because I'm convinced that the left field catalyst is not safe, even though I'd be happy if it was. So we're just trying to keep our eyes open. The judicial branch is the wild card in the whole cannabis legalization conversation, right? You have the executive branch, and Biden's, begrudgingly gonna grant clemencies to nonviolent cannabis offenders. You have the legislative branch, which is a bunch of fucknuts, for lack of a better word, and then you have the judiciary branch, which is the wild card here. So I just wanted to mention that because that's that's being worked on as we speak.
Yeah, no, and how do you suggest people keep track of some of these things? So these you don't often hear about the stuff in the mainstream media, right? So what kind of sources do you go to
I mean, Tom
stay
Angel, I
apprised of this
think
stuff?
he's still on here. If he's not, somebody tell him I was speaking his praises. Tom Angel's terrific at Marijuana Moment, and I encourage people to support him in his efforts because those guys do good work. But it's, you're going to read about it after the fact, is the truth, Michael, as most people do. There's enough things to worry about right now as we sort of look around the world. And as we start to look at solutions, and we start to look at solutions that come across the spectrum for cannabis, and that's, whether it's legislative solutions, whether it's structural and plumbing solutions for custody, which right now is the biggest thing, and we'll get that with safe banking if and when. But you also have, you have the continued state level adoption and the onboarding of the East Coast, and if that's what it is, and you're giving these operators another 2 to 3 years to go out and build their brands unencumbered from CPG, then that's what it is.
Everybody always wants to identify the winners, but I'm going to assume that it's hard to really know who the winners are when there's maybe not as much transparency, and it's harder to access on the ground information. So, how do you think people should be analyzing to at least maybe avoid those that would go under?
Well, I think if you look at the companies that are and their operating results, and the companies that are performing through this environment, I think that question answers itself. I will say a few things that I think is a little bit off the radar. Number one, we work with Forefront. We have a big Forefront position. Like that's the type of company. Like, and I tell Andrew all the time. Like Forefront's the best positioned company nobody's ever heard of, right? Because they entered California with this huge processing facility, and they're gonna replicate that in Illinois. No matter what happens with interstate, you're gonna need that part of the supply chain at scale. They can undercut the competition, take business in, and like as we said to them, like why try to produce the hit song each week when you could be the publisher, and let the market tell you what the hit songs are. And I think that type of strategy is really interesting and off the beaten path when you talk about the land grab and the deep first wide. Big fans of TerrAscend. We have a big position there. They're very levered to New Jersey and Pennsylvania and Maryland. You just got to do the work. Find the company, find the jockeys, right? It's about the jockeys still, I think. And I think to that end, over the last, call it 4 or 5 months, I think a lot of people have probably learned a lot of things about who the better jockeys are and maybe rethought their hierarchy in terms of management in the space.
All right. So last question on my end. Again, everybody make sure you follow Todd. So again, I want to be a little bit more generic here. You've been at this for a long, long time. You've had your cycles where things are working, cycles where things are not working. What got you through those emotionally tough periods when things aren't going your way, right? Because everybody has those periods where it's like, damn it, no matter how much I believe in what I'm doing, the damn thing just doesn't want to work, right? And that's hard emotionally to go through.
This is the best. This is the reason why cannabis is the best asset class. You lose money in crypto, you can't go take a bath in Bitcoin, right? You know what I'm saying? Like cannabis is terrific. I mean, it'll help you get through the trade. But no, I mean, more realistically, like it's not as easy as it looks. I spend a lot of time with my dogs, my emotional support animals. It's been a long 15-month tunnel for cannabis investors. But, I think it was Dr. Jerry Buss who said it on the Lakers miniseries. That's the thing about luck. You hang around long enough, it's bound to change. Not that should be your investing thesis, but if you believe in your thesis, you have to ride through some tunnels to get to that, proverbial Shawshank moment at the end.
Again, everybody that's here, make sure you follow Todd. Todd, I appreciate you spending the time here. Hopefully, Todd, you and I will get together in the months ahead here. And everybody enjoy the rest of your day. Thank you, Todd.
Thank you.